Good evening, Mr. Idris.
Okay, so today we shall be looking at double taxation and double taxation relief. That is the topic we are looking at this evening. Double taxation and double taxation relief. What is double taxation? Double taxation is different from multiple taxation. The word double taxation simply means a situation where income of a taxpayer is being subjected to tax more than once in the hand of different tax authority in different countries or in different tax jurisdiction. Double taxation simply means a situation where an income of a taxpayer is being subjected to tax more than once by different tax authority in different countries or in different tax jurisdiction. What this one means is that when you are a Nigeria resident, you are a resident of Nigeria, you now travel to abroad, you earn income in abroad for just a short period of time. You bring the income back to Nigeria. Despite the fact that that income has been subjected to tax in abroad, bringing it to Nigeria again, you are going to pay another tax on the income. That situation is simply called double taxation. A situation where an income is being subjected to tax more than once by different tax authority in different countries. Country A will subject it to tax. If you take the income to country B again, they are going to subject it to tax. That is the meaning of double taxation. It's different from multiple taxation. Multiple taxation simply means a situation whereby similar tax is imposed, a situation whereby similar tax is imposed on the same income by different tiers of government within a country. Multiple taxation occur within a country, but in the case of double taxation, it occurs between two different countries or more than two countries. In multiple taxation, we only have one country, the different tiers of government, federal government, state government, and local government collect tax on the same income. That one is multiple taxation. But in the case of double taxation, it means when an income has been subjected to tax in country A, you take the income to country B, the income is subjected to tax again. That is meaning of double taxation. Type of double taxation. What are the type of double taxation we have? There are two types of double taxation. We have juridical double taxation and economic double taxation. There are two types of double taxation we have. We have juridical double taxation and economic double taxation. What is juridical double taxation? Juridical double taxation simply means a situation where same income is taxed twice in the hand of same taxpayer in different country. Juridical double taxation simply means a situation where same income is taxed twice in the hand of the same taxpayer in different country. Mr. James Ogona is a medical doctor. He's a resident of Nigeria. He went to abroad to perform a surgical service to a particular patient. The income he earned from such operation is going to be taxed in abroad. while finishing the operation, he traveled back to Nigeria. That particular income he earned in abroad, bringing it back to Nigeria, is going to be subjected to tax again in Nigeria. That one is juridical taxation. A situation whereby same income is taxed twice in the hand of the same taxpayer in different countries. Another type of double taxation we have is called economic double taxation. Economic double taxation. Economic double taxation simply means a situation where same income is taxed twice in the hand of two different taxpayers in different countries. A situation where same income is taxed twice in the hand of two different taxpayers in different countries. You have a share in a country, in a company in abroad. That company is a foreign company and they are located in UK. You now have a share in that country, in that company. At the end of the year, that company pay you a dividend on your shares. That dividend will have been subjected to tax in the name of the country, in the name of the company in abroad. Why receiving the dividend in Nigeria too? Why receiving the dividend in Nigeria too? That dividend too is going to be subjected to another type of tax in the hand of the receiver. That one is called economic double taxation. A situation where same income is taxed twice in the hand of two different taxpayers in different countries. That is economic double taxation. That is economic double taxation. So those are the two forms or type of double taxation that we have. The next area we need to look at is called double taxation agreement. Double taxation agreement. What do you mean by double taxation agreement? Another name for double taxation agreement is called tax treaty. Tax what? Treaty. Tax treaty is another name of double taxation agreement. Tax treaty. Tax treaty simply means, or double taxation agreement simply means an agreement between two or more countries for the avoidance of double taxation on income. An agreement between two or more countries for the avoidance of double taxation on income. When two countries sign an agreement that they want to avoid double taxation on income, that one is called double taxation agreement or tax treaty. In the agreement, they may agree that if an income, take for instance, if Nigeria and UK sign double taxation agreement, the content of the agreement may state that if an income has been subjected to tax in UK, if you are bringing the income to Nigeria, the income will not be subjected to tax again in Nigeria. If an income has been subjected to tax in Nigeria and you are taking it to UK, that income will not be subjected to tax in UK. It may be stated in the double taxation. Or the income may be subjected to tax as at a reduced tax rate. Or the income will be subjected to tax as at a reduced tax rate. That is double taxation agreement. That is double taxation agreement. Though there are two types of double taxation agreements, which is not mentioned in this material. There are two types of double taxation agreements. which is not mentioned in this agreement. Number one type of double taxation agreement we have is bilateral agreement. Bilateral agreement. The double taxation agreement between two countries is called bilateral agreement. We have another one called multilateral agreement. Multilateral agreement simply means a double taxation agreement between more than two countries. A double taxation agreement between more than two countries is called multilateral agreement. Example of multilateral agreement: Africa Free African Continental Trade Agreement, AfCTA. AfCTA is an agreement signed between West African countries to ensure free trade within West Africa. Is a form of multilateral double taxation agreement. So I said there are two types of double taxation agreements: bilateral double taxation agreement and multilateral double taxation agreement. Bilateral double taxation agreement means double taxation agreement between two countries, country A and B. But in the case of multilateral double taxation agreement, a double taxation agreement between more than two countries. Example of multilateral agreement means Africa Continental Trade Agreements. Objective of double taxation agreement. What are the objectives of double taxation agreement? Number one, avoidance of double taxation on income. Avoidance of double taxation of income. Avoidance of double taxation of income. Another one, grant of tax treaty benefits. Grant of tax treaty benefits is another objective of double taxation agreement. Grant of tax treaty benefits is another objective of double taxation agreement. Another one, cooperation on tax matter. Cooperation on tax matter. Cooperation on what? Tax matter. Another objective of double taxation agreement we have: prevention of fiscal evasion and avoidance. Prevention of fiscal evasion and avoidance. We have another objective of double taxation agreement: exchange of information. Exchange of information is another objective of double taxation agreement. Another objective of double taxation agreement we have is non-discrimination between taxpayers. Non-discrimination between what? Taxpayers. All these are the objective of double taxation agreement. All these are the objective of double taxation agreements. List of countries Nigeria signed double taxation agreement with. What are the list of countries that have double taxation agreement with Nigeria? Number one, United Kingdom. Number one, United Kingdom. Number two, France. Number three, Belgium. Number four, China. South Africa is part of the country Nigeria signed up taxation agreement with. Canada is also part of the country Nigeria signed up taxation agreement with. Netherlands is also part of the country Nigeria signed up taxation agreement with. Pakistan, Italy, Spain, all these are the countries Nigeria signed double taxation agreement with. In one of the diets, maybe about 6 diets ago, a question was asked for taxation for skills level that we should list 10 countries in which Nigeria signed double taxation agreement with. 10 mark. 10 countries in which Nigeria signed double taxation agreement with. 10 mark. So, list of the countries Nigeria signed double taxation agreement with: United Kingdom, France, Belgium, China, South Africa, Canada, Netherlands, Romania, Pakistan, Italy, Spain, and Slovakia. Now, the major area we need to know that is very important to us. Another area that we need to know that is very important to us: content of double taxation agreement. Content of double taxation agreement. Content of double taxation agreement. What are the content of double taxation agreement? If two countries want to sign an agreement together, what are the features, key features of double taxation agreement or content of double taxation agreement? That one is very important to us. The name of the two countries involved in the agreement. The name of the two countries involved in the agreement. The rate of tax applicable in the two countries is going to be stated. The rate of tax applicable in the two countries will be stated. The transactions on which double taxation relief is applicable is going to be identified inside the agreement. The transactions on which double taxation relief will be applicable will be identified in the agreement. Another one, the arrangement for the exchange of information between the two countries. The arrangement for exchange of information between the two countries. The arrangement for exchange of information between the two countries. The date in which the agreement is going to commence and possible termination date of the agreement. The date in which the agreement will commence and possible termination date is going to be stated. All these are the key features of double taxation agreement or content of double taxation agreements. Now, what are the income exempted from double taxation? What are those income that are exempted from double taxation? What are those income that are exempted from double taxation? Number one, the remuneration of a professor or teacher who is resident for more than 2 years in the country for the purpose of, for not more than 2 years in the country for the purpose of teaching. When you are a professor, you are a lecturer, you travel to other country for not more than 2 years to teach in another university in another country. That salary you earn, if you take it back to Nigeria, is not subjected to double taxation. Government pensions are also exempted from tax, except the recipient is ordinary resident in Nigeria. When you receive government pensions, you are in Nigeria. Take for instance, maybe you work in US Army for like 20 years. After you retire from US Army for 20 years, you now travel back to Nigeria. While you are still in Nigeria, the US Army, they are paying you pension for you serving the service. For you serving them for 20 years, they are paying you pension. That pension that you are receiving from US while you are in Nigeria is not subjected to tax because it's a government pension. You have worked there, you have worked in US for more than several years before you can have access to that pension. Another one, aircraft and shipping profits are exempted 100%. Any profit derived by airline company, all these international airline company or shipping company, any profit that they derive, they are 100% exempted from double taxation. Why? Why do we exempt them from double taxation? Who can tell me why we exempt them from double taxation? Because airline and shipping company, they have their own type of tax called taxation of what? They have their own different type of tax called taxation of specialized business. They have their own tax called taxation of specialized business. Taxation of what? Specialized business. Another one, payment to a student or apprentice during his full-time education or training in Nigeria. Payment to a student or apprentice during a full-time education or training in Nigeria is also exempted from tax. Dividend paid by UK company to a Nigerian resident who has no permanent establishment in UK are also exempted from double taxation relief. They are also exempted from double taxation. Now, the next area we need to look at that is very important to us, double taxation relief. What do you understand by double taxation relief? Double taxation relief is an allowance or credit available to an income that have suffered tax outside Nigeria. Double taxation relief is an allowance or credit available to an income that has suffered tax outside Nigeria. That double taxation relief can be in two ways. It can either be on credit method or exemption method. That double taxation relief can either be on credit method or exemption method. double taxation relief, DTR, is an allowance or credit available to an income that has suffered tax outside Nigeria. And I said that double taxation relief can be of two methods. Can be of two ways, either credit method or exemption method. Credit methods means part of the tax that you're supposed to pay in Nigeria, you will be given discount. Instead of you to pay tax at the rate of 30% in Nigeria, they will ask you to pay tax, company income tax at the rate of 15%. Since that your profits have suffered tax outside Nigeria. Exemption method simply means that income is going to be totally exempted from tax in Nigeria. That income is going to be totally exempted from tax in Nigeria. Now, how do we compute double taxation rate for resident company? How do we compute double taxation relief for resident individual and non-resident individual? First and foremost, what is a resident company? A resident company simply means a company that is incorporated or registered in Nigeria under Company and Allied Matters Act. A resident company is a company that is incorporated or registered in Nigeria under Company and Allied Matters Act. A resident company is liable to tax in Nigeria based on its worldwide income. Worldwide income means the income that it receives in Nigeria and the income of any of its branches outside Nigeria. A resident company is liable to tax in Nigeria based on its worldwide income. Worldwide income simply means the income it receives in Nigeria and plus the income of any of its branches outside Nigeria. How do we compute that taxation relief for a resident company? How do we compute that taxation relief for a resident company? If we want to compute that taxation relief for a resident company, we need to consider two factors. We need to consider what? Two factors. Number one is we need to know whether there is an agreement between the two countries involved. Where there is an agreement between the two countries involved, the double taxation relief rate shall be the rate stated in the agreement. The double taxation relief rate for the company shall be the rate stated in the agreement. How do we compute double taxation relief for resident company? I said, if I want to compute double taxation relief for resident company, I have to consider two factors. One of the factors I'm going to consider is where there is an agreement between the two countries. The double taxation relief rate shall be the rate stated in the agreement. Number two factor is where there is no agreement between the two countries. If there is no agreement between the two countries, the double taxation relief rate shall be Commonwealth rate or half of Nigeria tax rate. The double taxation relief shall be when there is no agreement between the two countries. The double taxation relief shall be the lower of Commonwealth rates or half of Nigeria tax rates. How do we get Commonwealth rate for resident company? If you want to get Commonwealth rate for resident company, foreign tax paid all over total profit from foreign business. Foreign tax paid all over total profit from foreign business. Foreign tax paid all over total profit from foreign business. That is how we get Commonwealth rate for resident company. Let me repeat myself again. I said there are two ways for computing double taxation relief for resident company. We consider two factors. Number one is where there is double taxation agreement between the two countries that the resident company derive profits. The double taxation relief rate shall be the rate stated in the agreement. Number two factor is where there is no agreement between the two countries, the double taxation relief rate shall be the lower of Commonwealth rate or half of Nigeria tax rate. How do we compute Commonwealth rate? Foreign tax paid all over total profit. Nigeria tax rate for a company. What is the company income tax rate for a company? Company income tax rate can either be 20% or 30%. Company income tax rate can either be 20% or 30%. That is how we compute double taxation relief for resident company. Now, the next thing that concerns us, how do we compute double taxation relief for resident individual and non-resident individual? How do we compute double taxation relief for resident individual and non-resident individual? First, who is a resident individual? Resident individual is otherwise called Nigeria resident. Resident individual is otherwise called Nigeria resident. Resident individual is a person who reside or domicile in Nigeria for more than 183 days. Resident individual is a person through an assessment year, he domicile or reside in Nigeria for more than 183 days. And a Nigeria citizen serving as a diplomat in a foreign country. Nigeria citizen means somebody that was given birth in Nigeria or his parent is from Nigeria through nationality. So, resident individual simply means a person that domicile in Nigeria for more than 183 days. And a Nigeria citizen serving as a diplomat, that Nigeria citizen is working in the Nigeria Foreign Embassy in another country. That means he's working for Nigeria government. Nigeria government now transfer him to other country to go and work in the embassy of Nigeria. That person is still a resident individual. Who is a non-resident individual? A non-resident individual is a person that does not domicile in Nigeria for more than 183 days, or a person that domicile in Nigeria for less than 183 days but derive income in Nigeria. Non-resident individual is a person that domicile in Nigeria for less than 183 days but derive income in Nigeria. And what? And a foreign citizen and a foreign citizen serving as a diplomat in Nigeria. A foreign citizen serving as a diplomat in Nigeria. They are non-resident individuals. They are non-resident individuals. Now, how do we compute double taxation relief for resident individual and non-resident individual? If we want to compute double taxation relief for both resident individual and non-resident individual, the double taxation relief rate shall be lower of Nigeria tax rate or Commonwealth rate. The double taxation relief for both resident individual and non-resident individual shall be lower of Nigeria tax rate or Commonwealth rate. So that is what we have on double taxation relief. Now, let's look at a question. Majorly, the question that concerns us on double taxation is how do we compute double taxation relief for resident individual and non-resident individual? How do we compute double taxation relief for non-resident individual, resident individual and non-resident individual? We don't need double taxation relief for companies, though it's part of our syllabus, but the introductory part of it just on our syllabus. But the major one is for individual, both resident individual and non-resident individual. But the one of company is for the advanced tax, though we may look at one question in the one of companies too. Let's look at question 5. Somebody should help us read question 5. Question 5.
Dr. Akinwale is the dean of a faculty at University of Ilorin. He is married with 2 adopted children and a dependent relative. He earns a basic salary of 9,800,000 naira per annum in the university, an allowance of 1,600,000 naira per annum on transport and other benefits in kind, worth 850,000 naira. The university registered their staff with ARM pension and Leadway pension, and the staff also contribute for federal government housing scheme, aside the deduction of cooperative scheme for housing estates, which is 65,000 naira every month. In 2024, Dr. Akinwale was appointed by the Oxford University in England as visiting associate professor to lecture on impact of global crude oil price decline on the economy of Nigeria. The gross remuneration as agreed is $970,000 before deducting income tax in England. In 2024, he was paid net income of 680,000 naira on the salary payroll of Oxford University after the income tax has been deducted. Assuming the rate of exchange for both currencies is 26 naira to $1, you are required to compute the tax liability of Dr. Akinwale in Nigeria.
What type of tax Dr. Akinwale will pay? What type of tax Dr. Akinwale will pay?
Personal income tax.
Personal income tax. Personal income tax. So, personal income tax. If you want to compute personal income tax, earned income and unearned income. Under is earned income. In this question, what are the type of earned income that we have here in this question? Who can tell me? One of the type of earned income we have is employment income of what? Basic salary, which is how much? 9.8. So the solution, Dr. Akinwale, computation of tax liability for 2024 year of assessment. Basic salary that now I divide this income into two. I divide Dr. Akinwale income into two. I said Nigeria income and foreign income. What are the income earned by Dr. Akinwale in Nigeria? What are the income that he earned in Nigeria? What are the income that he earned in Nigeria? Number one income he earned in Nigeria is basic salary of what? 9.8 per annum. While number two income he earned in Nigeria, which is from University of Ilorin, transport allowance of how much? 1.6. Another income he earned in Nigeria is other benefit in kind, 850,000. Those are the Nigeria income. Under his earned income, apart from Nigeria income, he now earned another income called what? Called foreign income. Called what? Foreign income. How much foreign income Dr. Akinwale earned in 2024 for University of Oxford? How much? The gross remuneration agreed before deduction of income tax is how much? $970,000. To convert it to naira, what is the exchange rate? 26 naira to $1. So $970,000 times 26 naira is going to give us 25,220,000. That is his foreign income. That means his total income, both Nigeria income and foreign income, is going to be 37,470. His total income, both Nigerian income and foreign income, is going to be what? 37,470. If you could remember, why computing personal income tax for an individual or for an employee, After total income, what are we going to minus from total income? Who can remind me? What are we going to minus from total income?
Tax exempt.
Tax exempt. What are the examples of tax exempt?
NHF, NHF, IS.
Which other one?
Pension.
Life assurance.
Pension. Life assurance policy. In this question, do we have tax exempt?
Yes.
Do we have tax exempt in this question? Are we giving any amount of tax exempt?
Yes, sir.
Yes.
Which one?
National scheme. Housing
National
scheme.
what?
Housing scheme.
Pension.
That one is cooperative now. Cooperative scheme for housing estate. Maybe it's a staff of University of Ilorin. They are now deducting cooperative for housing estate. It's not National Housing Fund. But ladies and gentlemen, there is tax exempt in this question. If you look at this statement will tell us that there is tax exempt. Read it.
Federal government housing scheme.
The university registered their staff with what? ARM pension and leadway pension. That means University of Ilorin, they normally pay pension for their staff. They normally deduct pension from their staff salary. Also, the staff also contribute to federal government housing scheme. What is the federal government housing scheme? Who can tell me? Federal government housing scheme? National Housing Fund. NHF is federal government housing scheme. Now, the question is, we are not giving pension contribution amount. We are not giving NHF amount. How much are we going to assume is pension contribution? How much are we going to assume is NHF? How much pension contribution does company normally deduct from staff salary every month? What is the rate?
8%.
8% of what?
Basic salary, housing, and transport allowance.
8% of sum of basic housing and what? Transport. In this question, for the pension, 8% of basic housing and transport. In this question, we have basic salary, we have transport, we don't have housing. That means 8% of sum of basic salary plus transport. Basic salary is 9,800,000. Transport allowance is 1.6. Addition of the two. Addition of the two. Addition of the two. What is the addition of the two? $9.8 plus 1.6. That will give us how much?
11.4.
11.4. 8% of 11.4. Eight percent of 11.4. Oh yeah, now time is going. Yeah?
912.
912. Can you see the 912? 912. In the case of National Housing Fund, if you are not giving the National Housing Fund amount, What is the minimum contribution company deduct from staff salary as contribution to National Housing Fund? What is the rate?
Is it 2%?
2.5% of basic salary. 2.5% of basic salary. That means National Housing Fund is going to be 2.5% of 9.8. It will give you 245,000. So our total tax exempt, NHF plus pension, is going to be 1,157,000. 1,157,000. If you less it from total income, you are going to get gross income of how much? 36,313,000. You will get gross income of 36,313,000. After getting your gross income, what are you going to minus? After your gross income, why computing personal income tax? You are going to minus consolidated relief allowance, which is under tax relief, Abi? And your consolidated relief allowance is either higher of 200,000 or 1% of gross income plus 20% of gross income. In this case, 1% of gross income is higher than 200,000. I'm going to take 1% of gross income. I'm now going to plus it plus 20% of gross income. At the end of the day, I'm going to get 7,625,730. If you minus it from the gross income, you are going to get chargeable income of what? 29,844,260. You cannot compute your tax liability. First 300,000 at 7%, it will give you 21,000. Second 300,000 at 11%, 33,000. Next 500,000 at 15%, 75,000. Next 500,000 at 90%, 95,000. Next 1.2 at 21%, 36,000. Above 3.2, that one will be at 24%. That means we are going to minus 3.2 from 29,844,270. What will be the balance if we minus 3.2 from it? The balance is 26,644,270. That one is going to be at what percentage? At 24%. 24% of 26,644,270 is going to give us 6,394,625. So my total company in personal income tax that the company will pay is now going to be 6,954,625. I will now less double tax relief. I will now less double tax relief. I want to ask a question. Looking at the income of Dr. Akinwale, which of the income want to suffer double tax? Which of the income want to suffer double tax?
The foreign income.
The foreign income. This 25,220,000. It has already been, they have already collected tax UK. We want to tax it again in Nigeria. Is the one that want to suffer double tax. Since you want to suffer double tax, we are going to give them double taxation relief on it. How do we compute double taxation relief for resident individual and non? How do we compute double taxation relief for resident individual? Dr. Akinwale, is he a resident individual or non-resident individual? Dr. Akinwale, is he a resident individual or non-resident individual? Oh yeah, now.
Resident individual.
Dr. Akinwale, is he a resident individual or non-resident individual? He's a
He's both
resident.
residents and non-resident. Oh, he's a resident, sorry.
He's from Nigeria. He's working in Nigeria. He's working in University of London. He's a Nigerian resident. So, looking at the notes, how do we compute double taxation relief for Nigerian residents or non-Nigerian residents? I said, if you look at the notes, how we compute double taxation relief? Lower of Nigeria tax rates or Commonwealth rates. And if you want to get Commonwealth rates for both resident individual or non-resident individual, it's going to be foreign tax paid all over gross foreign income. Foreign tax paid all over gross foreign income. foreign tax paid all over gross foreign income. Now, let's go back to this question. Let's go back to the question. If I want to compute double taxation relief rates, I will look at lower of Nigeria tax rate. How do I get Nigeria tax rate under personal income tax? How much tax liability did I get while computing the tax liability for Mr. Akinwale? The tax liability I get is 6,954,625. What is the total income of Dr. Akinwale? The total income of Dr. Akinwale is 37,470,000. So if I want to get Nigeria tax rate under personal income tax, tax liability all over total income. The tax liability means the personal income I get before deduction of double taxation all over total income. If you divide that, you are going to get 18.56%. How do I get Commonwealth rates for Dr. Akinwale? How do I get Commonwealth rates? If you look at the Commonwealth rates, how much is the foreign tax paid? How much is the foreign tax paid? How much is the foreign tax paid? The gross remuneration that he wanted to collect in abroad is 970 before deduction of tax. But when they want to pay him, they're now paying how much? They paid him 680. That means they have deducted how much tax? How much dollar tax? The gross remuneration is $970,000. But when the University of Oxford want to pay him, they pay him $680. Deducted. How much tax was deducted? Oh yeah, now.
Is it 290?
Difference between 970 and 680.
290.
$290 was the tax that he paid on the gross income of how much? How much is the gross income he earned in abroad?
970.
So he paid $290. That $290, if you convert it to Naira, how much is he giving us? Times 26.
7540. 540.
That means 7,540,000. Do you understand how we get this 7,540,000? The foreign tax he paid, foreign tax paid. Foreign tax paid. That foreign tax he paid, $290 times the exchange rate times 26, you will get 7,540,000. This gross foreign income, 25,220,000. Who can remind us how we get it? How we get 25,220,000?
Is it his salary, his foreign salary, the exchange?
Yes, the gross salary now.
The Nigerian equivalent.
Yes, 970,000 times what?
226.
Times 26. So foreign tax paid divided by gross foreign income, how much percentage are we getting? 29.90%. 29.90%. The question is, what will be our double taxation relief rate out of the two?
How did you get the 29.90?
740,000, 7,540,000 divided by what? Divided by 25,220,000 times 100. Do you understand?
Okay, sir.
Now, my question is, Nigeria tax rate is giving us 18.5%, 0.56%. Commonwealth rate is giving us 29.90%. How much, what rate are we going to use for double taxation relief? Out of the two rates, what rate are we going to use? We say double taxation relief rate for resident individual and non-resident is the lower of Nigeria tax rate and Commonwealth rate. Lower between Nigeria tax rate and what?
Commonwealth tax rate.
Commonwealth rate. Which one is lower among the two?
Nigeria.
Nigeria tax rate. That means our double taxation relief rate will be what? 18.56%. 18.56%. So for me to get my double taxation relief amount, how much am I going to do? How much, which income suffer double tax? Which income want to suffer double tax?
The foreign income.
Foreign income. So 18.56% of the foreign income, that would be the double taxation relief amount. So 25,220,000 times 18.56%. That will give us how much? 4,680,962. That will be our double taxation relief amount. I will less it from the tax liability. My tax liability is 6,954,625. My next tax payable is going to be how much? The tax Mr. Akinwale is going to pay in Nigeria. How much net tax Mr. Akinwale will pay in Nigeria? The net tax payable that Mr. Akinwale is going to pay in Nigeria is going to be 2,273,663. The tax Mr. Akinwale is supposed to pay in Nigeria is how much? How much tax Mr. Akinwale is supposed to pay in Nigeria? Who can tell me? Assuming there is no double tax, how much tax Mr. Akinwale is going to pay in Nigeria? Mr. Akinwale is supposed to pay tax of 6,954,625 in Nigeria because part of the income have suffered tax outside Nigeria. Whose income suffer tax outside Nigeria? the foreign income, we now give double tax relief. So the net tax payable Mr. Akinwale will now pay in Nigeria is going to be what? 2,273,663. That is how we compute double tax. Let's look at question 6. Question 6. Oh yeah. Somebody should help us read question 6. Question 6. Oh yeah, question 6.
Mr. James Blue is in the employment of Research Foundation of Nigeria. He arrived in Lagos on January 1st, 2024 to assume duties on the following conditions. 1. Mr. James Blue, being a British citizen, received $240,000, which is part of his salary in London, less UK income tax. Number 2, the foundation would pay Mr. James in Nigeria 84 million naira, and this should be subjected to Nigeria income tax. In view of the double taxation agreement between Nigeria and UK, Mr. James will be entitled to the double taxation relief on any part of income assessed in Nigeria. The United Kingdom tax paid on $240,000 is $34,000. The rate of exchange is 235 naira to $1. Mr. James paid life assurance premium of 2,450,000 naira and NHIS contribution of 290,000 naira in Nigeria. So we are required to compute A, Mr. James' charitable income, and B, the credit to be given to Mr. James on his United Kingdom income. So I have finished.
Okay, thank you very much. Now, Mr. James Blue, a resident of UK. The Nigeria income of Mr. James is how much? How much is Nigeria income of Mr. James? 84 million. Can we see the 84 million? 84 million. How much is the foreign income of Mr. James? How much is the foreign income of Mr. James? Who can tell me how we will get foreign income of Mr. James? $240,000 times what?
Our exchange rates.
What is the exchange rate?
235 naira.
Oh yeah, 240 million times 235 naira. That will give us more, how much? That will give us how much?
That's 56,400,000.
56,400,000. That means the total income of Mr. James is how much? both Nigeria income and what? Foreign income. The total income is how much?
So now be 140 million.
$100 and what?
40,100,000.
From there, we can less tax exempt. What are the tax exempt we have in this question? What are the tax exempt we have?
There's life assurance premium.
And there is what?
NHIS contribution.
NHIS contribution. For the life assurance, I use the life assurance. I failed to use the NHIS, which I'm supposed to use. Do you understand? I have to correct that. It's part of the correction I need to make. It's part of the correction. NHIS contribution. 290,000. It's part of the tax exempt. NHIS contribution is how much? 290. So NHIS 290,000. If he less the two tax exempt, if he less them from the total income, you now get a gross income of how much? 137,660,000. 137,660,000. If you get that, after your gross income, you compute your tax relief. Your tax relief, 1% of gross income plus 20% of gross income. At the end of the day, your tax relief, CRA, consolidated relief allowance, is going to be 28,908,600. What is the chargeable income? My chargeable income is my tax relief minus gross income. 137,660,000 minus 28,908,600. I will get a chargeable income of how much? 111,491,400. I can now compute the tax liability. First 300,000 at 7%, 21,000 naira. Second 300,000 at 11%, 33,000. Next 500,000 at 15%, 75,000. Next 500,000 at 19%, 95,000. Next 1.2 at 21%, 336,000 naira. Above 3.2, how much will be above 3.2? 3.2 million minus dischargeable income. 3.2 million minus 111,491,400. The balance is going to give you what? 108,291,400. At what percentage? At 24%. It will give us 25,989,096. That means your total personal income tax liability is going to be what? 549,936. You will now less double tax relief. Out of this income, which income want to suffer double tax?
The foreign income.
Foreign income. Now, let me go and compute double tax rates. How do I compute double tax rates? Nigeria tax rate and Commonwealth rate. How much is the Nigeria tax rate? Nigeria tax liability, 26,549,936, all over total income of the taxpayer. How much is the total income? 140,400. If I divide that times 100%, I'm going to get 18.91%. How much is the Commonwealth rate? How do I get Commonwealth rate? How much is the foreign tax paid? How much foreign tax was paid from his foreign income? How much foreign tax was paid? How much foreign tax was paid from the foreign income?
$34,000.
$34,000 times 235 naira. 34,000 times 235 naira. How much is he going to give us?
$799.
7,990,000. All over gross foreign income, 56,400,000 times 100. What percentage is that one will give us? 14 point what? 17%. Out of the two, which one are we going to take?
14.17.
14.17. This 14.17, the double taxation relief amount, 56,400,000 is the one that want to suffer double tax, times 14.17%. It will give us 7,990,000. If I less it from the total tax liability, my net tax payable is going to be 18,590,936. That is the net tax payable. Any question, any issue on this?